Hi, my name is Michael Lalor. I'm the Director of Ernst & Young's Africa Business Center. And this morning we were giving a brief presentation as part of the LeadersAngle. Really what we looked to cover was looking at the African growth story, looking at why many of our clients are becoming increasingly optimistic about Africa, and presenting some of the facts that underpin that optimism. But also by the same token looking at highlighting some of the challenges and risks of doing business in Africa, and starting to provide a perspective on how one goes about prioritizing one's investments and the markets one invests in Africa. And an edited version of the presentation follows. The South African economy is the 26th largest economy in the world. By my back of the envelope reckoning, the 10th largest emerging economy, if you include the likes of Saudi Arabia, for example, as an emerging economy. Nigeria and Egypt, the second, or Egypt and Nigeria, the second and third largest economies in Africa, are also, they're respectively the 40th and 41st largest economies in the world today. We've looked at every single African economy, and we've looked at the consumer growth trends over the last 10 years. So we've broken those down, sorry if you can see it there, by $5,000 increments, the consumer segments. But the only category here where there's negative growth in terms of, from the poorest of the, you can see positive growth there on the poorest of the poor, and negative growth across the more, as you get across to kind of middle classes and the more affluent, are a small handful of economies that include Algeria, Burundi, Chad, Eritrea, Gabon, and Zimbabwe, unsurprisingly. There's a tendency, and particularly among these bottom economies here, towards greater affluence. And in some cases, quite a marked tendency towards greater affluence, with a significant fall off in the numbers of the poorest of the poor, and a significant increase in growth as you get across the sort of more affluent segments. And what we've got here is a heat map, as we call it, and it just shows in relative terms, from green to red, the most and least penetrated countries in terms of mobile telephony. Mobile telephony is by any measure, a significant growth market in Africa, and mobile operators are making significant returns from their investments in there, not only in South Africa, but right across the continent. I mean, just to cover some of the companies very briefly that are doing business and expanding across the continent. I mean, obviously, we all know the names of some of the South African companies that, particularly sort of post-1990, let's just say, started going northwards in a big way. SAB were one of the first. MTN, through some of the assets that they've bought, have got a presence in Sudan and some other West African countries. And then there are others like Standard Bank that are starting to kind of grow, and they've had some problems, but they've refocused and consolidated their focus on African growth. And Nampak, for example, another one that are growing quite strongly into and across the rest of Africa. And of course, there's China, sometimes the kind of the elephant in the room. And just to illustrate the increasing presence of China in Africa, this is 10 years, and you can see the difference in 98 to 2008. The darker sort of orange, the darker shading being the bigger investments. And you can just see how, just very light investment in 1998 through to, and I think even over the last 2 years, and certainly if we look at our research in terms of FDI and where the investment has come, where the growth has come from over the last 2 years, this is going to be, in some parts, almost painted dark orange within the next 5 years. I've been talking about the economic growth and the investment and so on, and why our clients are interested in Africa. But clearly, it's not just about economic growth. Economic growth doesn't sustain itself. There needs to be other dimensions, social and political dimensions, will ultimately sustain that growth. Again, you can see here, there's the sort of the key fault line here, 1990. The Berlin Wall comes down, the end of the Cold War. This is Polity 4's democratization index, and we've taken it, the African countries. And you can see this uptick here. It's all relative, but you can understand in that period from, say, 1990 to 94, where came with tremendous instability as well. There's this kind of social and political change doesn't happen without enormous social upheaval. As a firm of accountants and auditors, we also have to be realistic. And we can't simply wear rose-tinted spectacles. So we also have to advise our clients on the real challenges and risks of doing business in the continent. I mean, I guess it begins with the perception gap that still remains. Ivory Coast, Libya, other challenges that some of our countries face. And these were people we asked who weren't currently invested in Africa. So what was it that, held them back, basically? It was overwhelmingly political risk factors. So the perception of a politically unstable environment, the perception of corruption, of kind of security concerns and so on. It was only after that they started talking about things like infrastructure and the kind of regulatory environment and kind of distribution challenges and things like that, so kind of more operational type concerns. Let me start again with another piece of work that we did, and this was a survey of financial directors, CFOs, who of global multinationals doing business and investing into what we termed rapid growth markets, so basically into emerging markets. And this was the sort of the high-level list that they came up with. But in terms of our global survey results, what these executives came back to us and said, the number one concern for us is around the economics and the financing, and specifically the kind of the macroeconomic environment, inflation, currency volatility, and so on. Just the inability to control that and the impact that might have on our operation, on our investment. The second one was around mode of entry. So how do we structure our entry into these new markets, into these rapid growth markets? Operational concerns, and then others being the regulatory. So I think the uncertainty of the regulatory environment in many emerging markets, in many rapid growth markets, where they're still in the process of maturing. There's a lot of that they're evolving. Human capital, just the sheer shortage of talent in different markets, particularly certain technical type of talent, certain management kind of talent, and then political risk or the cost of political risk came sixth on the list, sort of fairly low down. And we started to develop what we call a risk radar. So I started to identify what for us and for our clients are the top 10 sort of big risks of doing business across the continent. You're not dealing with fundamentally different regulatory systems. And regulatory systems that across the patch, from crossing one border to the other, are in sometimes dramatically different states of maturity and evolution. So, I think that for us is the biggest risk in doing business in and across the continent at the moment. The second one is mode of entry, and I think particularly for people who are looking to enter into markets and set things up, I think it is really difficult, and I think it is more unusual in many African markets than in other parts of the world. Talent management, again, for us, so human capital, fairly low down the list here and sort of kind of mid there. I think for us it is a big challenge across the continent and a big risk, certainly for multinationals. The infrastructure gap, I think, is self-explanatory. China Inc., to say a little bit about that, I think, and this comes back to the point about, let's call it South Africa Inc. How does South Africa Inc. compete against the China Inc. model? And I think, and it's not just China Inc., but I think China Inc. is a particularly difficult one to get one's head around. And as South African companies, as South African businesses, with any kind of growth ambition in Africa, I think we need to get our head around it. The future of this country and our ability to raise our economic growth threshold to whatever it needs to be in order to meaningfully create jobs, let's say at 7%, is integrally tied into the future of this continent, into our ability to participate in the growth story of this continent. Because at the moment, we're not doing it very successfully. We're growing, I don't know what our growth rate this year is going to be, 3%. The rest of Africa is growing at 6% on average. And foreign investors are becoming increasingly excited about the rest of Africa as opposed to us. We need to decide how we're positioning ourselves and how we effectively position ourselves, not only as a as a launch pad into the rest of Africa, but how South Africa Inc. participates in that growth story and doesn't get completely sidelined by China Inc. and others. So that for me is a big risk for South African business in general, but also in terms of how one does business across the continent. It's a big strategic risk. Very briefly then, inflation is a big challenge for many African countries and will be for the next few years. And related to that, of course, is cost management. Political uncertainty for us is a factor. It's not a big factor. I mean, to be honest, I'll only put it on this list because it is something that is in the minds of investors. Together with corruption. Corruption's a reality, it's an issue, but it's something that you deal with on a day-to-day basis in every country. The longer-term issue, I think, for business in terms of risk is the being and remaining relevant to these markets and the consumers in these markets. Let me sort of wrap up then. A key point here is that despite the opportunity, the challenges, etc., and we can talk about this at an Africa level, the reality is that there's a tremendous diversity across the continent. There are opportunities, there are challenges. There are certain countries in Africa that rank head-to-head among the best emerging markets in the world. Mauritius is the highest ranked South African country. South Africa is next. South Africa is ranked higher than any of the other notable emerging markets, let's just say, other than Malaysia and Thailand probably. Certainly way ahead of any of the other BRICS. Let's start to look at the regional trade blocs and let's understand which of these are more or less coherent given your objectives, because some of them are. So if one looks at West Africa, for example, it's still very fragmented, still very difficult to do business across borders there. Probably most interesting there at the moment is the north-south corridor from Durban and ultimately up to Lubumbashi in the DRC, we haven't noted on here, and with a spur to Dar es Salaam in Tanzania there. So urban trends, urbanization trends, again, for us, the lens that one should be using here in terms of analysis, particularly for consumer-facing sectors, for example, are less country-specific lenses and more city-specific lenses. So what are the developments in terms, not just of cities, but in terms of urban conglomerations, urban corridors, and there's some very interesting developments here. And then you can also take, quite a crude analysis, different factors, but quite revealing and quite interesting in terms of a conversation. Just saying, take some factors that determine the relative stability or positivity of the investment climate and compare it to growth prospects. And then just use the size of the economy currently as some kind of proxy as well, just to give you a sense of what you're talking about here. So very briefly and in conclusion then, one, ensure that the whole, overall, how do you ensure that the whole is greater than the sum of the parts? So your design of your entire African operations for us and how you manage it across those countries is more important than the individual structures and what have you within the countries. So it's important up front to get one's head around that. Talent management we've spoken about already. The last two I think are starting to talk about SA Inc. and the potential competitive advantage of SA Inc. What China generally hasn't been good at, and I don't think will be good at, is long-term sustainable impact on African economies. They bring in often their own people in to do the work. They're not creating sustainable jobs. Already, one starts to get rumblings from different parts of Africa that the quality of workmanship is not great and that people aren't that happy with the nature of that relationship. I think that as business, we need to be really defining for ourselves, rather than just individual companies, what the role is that the private sector in South Africa should be playing in terms of helping to drive Africa's growth.